Welcome back. Today is Wednesday, 19th of October. I'm really excited because time check is 10:30 a.m. Eastern Time, 10:30 p.m. Singapore Asia Time. Thank you for joining us here today. We got a big news coming out from the market today. Dow climbs 100 points in choppy trading as investors weigh solid earnings, rising yields. In fact, this morning I just sent out an email to all of our spiking members. We have 3 consecutive days of the market riding up since last week. All right. So last week we got inflation data coming out. And on that day itself, the day when inflation data was published at 8:30 a.m. Eastern Standard Time, the intraday market means from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time, the market rallied up. And since then, we have consecutive up of the Dow Jones until today. All right. So I want to bring out the first important article for us, kind of make sense to know what the heck the FOMC members or the Fed members or the commissioners, they are really thinking about. And some of their thinking, whether we got kind of blindsided by them, misled by them, or all kinds of nasty language because they are the ones who came up with transitory inflation. Yep. Please remember this. We must always check back to what they done last year all the way to January this year, telling the whole world that we are facing a transitory inflation. And they refused to raise the interest rate January of 2022. They missed the opportunity. Now, they changed the tune altogether. They are all out to push the interest rate as high as possible, forgetting the fact that originally they got blindsided by inflation. They were kind of looking at lagging inflation data, make the decision slow, and that's why the monster has been broken out of the genie bottle. This is the crux of the matter. So if I show you this statement right now from one of the commissioner, you're going to be like boiling volcano within you and kind of thinking, are these guys out of their mind, or are they even competent to be doing the job? Because you must remember where we are right now is because they refused to raise the rates early. And the monster is out. Now, once the monster is out, to contain the monster is even much more difficult. So they are looking at lagging data. They are trying to do catch up, and they have broken the trust of Wall Street. Period. So here we go. We're going to look at this article and kind of really get fascinated at how they make their decisions. And you and I look at it with open eyes from a third-party perspective. All right? Going through past, present, and future. Here we go. Really interesting right here. This is the articles that kind of push out saying that treasury yields climb as recession fears spread. All right. So I kind of move it down right over here. I'm going to bring you to the important paragraph found right over here. Here we go. This is the mama box. Speaking at an event on Tuesday, Minneapolis Fed President Neil Kashkari said he saw no reason not to push the central bank's benchmark funds rate above 4.75% in order to tackle inflation. Such levels were last seen in the first half of 2006. Now he's pushing for 4.75%. This is way past the original terminal rate at 4%. Way past the revised terminal rate at 4.5%. Now this guy wants to push it to 4.75. Mama! And if you take out your calculator, 4.75 plus 3.5, the ordinary man will be servicing a 10, 20, 30-year tenure of the mortgage payment at 8.25% per year. This is crazy. And what is the real meaning of 4.75%? I show you the real meaning of 4.75%. Here we go. Today we are at 3.0%. All right? And by the time we hit November, we're going to add 0.75%. And then December, they also want to push it for another 0.75%. All right? So when you add this up, this equals to the fact that it's going to hit 4.5%. Okay, so 1.5 plus 3 is 4.5% when we close off the year 2022. Now, if that joker wants to push it to 4.75, it means that on 1st of April, that's the next FOMC window, 2023, he's going to go for another 25 basis point to hit 4.75% at the point in time when we enter into the period. So let me adjust this and you guys can kind of capture this and understand what the heck is going on with these guys. At 4.75%, there are a few ways to play this number, all right? Either you straight away go aggressive right now instead of the 0.75% next month in November, which is coming up first week of November. You can raise it to 4%, 100 basis point to hit 3 plus 1 is 4%, all right? And then by the time we hit December, we already hit 4.75%. That means to say, in February, it may possibly go above 4.75%. Are you with me right now? This is not granted. This is not cast in stone. This is not fixed. This is absurd. What the heck is going on with these guys? So kind of upset, and this guy they put in on CNBC is talking nonsense right now because they never accept the responsibility that they could have raised interest rates at the very beginning of this year. They didn't accept that responsibility. And right now preaching about all kind of nonsense. So, we may possibly hit above 5%. 5 plus 3.5, we're going to have a mortgage service interest of 8.5% per year. Now that is monster. And what else can we possibly do? Because if everybody start to speak the same language, it becomes a self-fulfilling prophecy. The only thing that can turn it around is there's a tank, a big drop, a spike down of the inflation data. But that's not forthcoming because last week we hit 8.2%. So you are looking at this conundrum right now and we say, holy moly, how do we handle this situation? It's kind of getting very, very complicated, right? And at the same time, today, right now, the very brokerage house that we use, holy moly, Interactive Brokers Thomas Peter Fee sees the S&P 500 dropping nearly 20% from here. He's kind of singing the same tune as Jamie Dimon. All right. They want to see the market collapse another 20%. Maybe they are seeing something that we do not see. But this is the part where, investing becomes very, very fun. We are sitting on two opposing camps. Nobody knows for certainty who is right or wrong. There's no magic crystal ball to begin with, all right? I can only present to you the chart from the Dow Jones, which is the benchmark barometer for the US stock market. What we have observed is this. This was the day whereby inflation data was announced 8.2%. It dropped right here, and on the intraday, it climbed up, It climbed up one day. The second day went up, this is still a up candle. The third day went up. Yesterday went up, and today we still see a green candle. Okay, the market badly wants to fulfill what we call a pent-up rally. This is happening, all right? But then, you see, get the drift right now. So let me make it easier for you all, and then you'll understand the teaching today, all right? So, what was the message? Before January 2022, all right? The market kept warning. The market was warning the Fed about inflation, right? So let me put this up very clearly so that you all understand why the frustration from Wall Street about the Fed, this bunch of This bunch of jokers, what are they trying to do? Before 2022, the market kept telling Fed, hey, we have a problem. Inflation has gone above 2%, gone above 5%, bam, already hit 7%. The market was telling the Fed, we are facing a crisis right now. Back then, before Jan 2022. And then you have the Treasury Secretary, Janet Yellen, and then you have the Fed Chairman, Jerome Powell, and then you have the President, Joe Biden, three of them coming out to tell the market, hey, this is transitory, it's fine, we are in control. Please remember the before, during, after, the past, present, future. Please remember this. This was the market already warning the Fed, hey, you got to take control of this inflation, got to raise interest rates. They failed to do that in January 2022. Now, Wall Street is telling the Fed, hey, inflation data has gone down. You're looking at lagging data right now. Again, Wall Street is very fast. It's always at a cutting edge because why? We are traders, man. And everyone leveraging off their data sources, leveraging off their grassroots feedback, they are at the edge because they are deploying money every single day, not the fat guys. The fat guys are sitting in their high ivory towers. They are not looking at the market. And now Wall Street is telling the Fed, hey, inflation has tanked. Even Professor Jeremy Siegel from Wharton Business School telling the Fed, hey, inflation has come down already, but the data you're looking at is not reflecting that yet. So please, don't go and keep raising interest rate. Right now is the best time to calibrate the interest rate. Are you with me right now? Because if you don't understand this part, you won't understand a single damn thing I'm talking about here. It's going to be very, very difficult for you to appreciate that we are dealing with a dynamic live market. And this is the problem. They're going to push the rate so high and fast, I think we may possibly drop into a very severe recession. Because we are dealing with a bunch of guys who just don't wake up from last year to this year to next year. It's going to be a repeat. So it's very dangerous right now. We're looking at 4.75 and possibly hit 5. And then, holy moly, you have interactive brokers, you have Morgan Stanley coming out to sing the same tune. Market has to drop another 20%. All right? So this is the backdrop of today. But while I'm making my grievances heard out here, you need to know this. And that is, what does the market want? You ask yourself and see the data yourself. What does the market want to see? This is the real market. This is not the Fed. This is the real market. The prices moving up and down, dynamic live streaming. Boom, 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 boom. What does the market want to see? You are seeing it right now. The market wants to go up. But it can't go up if all these jokers keep singing the same tunes. You know, every time the market wants to rally, they come out and breathe it down. And I think that's the only thing that they can do right now. So we are in a situation described as conundrum. Turn left wrong, turn right wrong, stay center also wrong. With that introduction, how's everybody? Wow. Well, come back, and I love to do this part right now. Please go to the live stream chat. If you are with us, let me fire off the first live chat. Welcome back. Wow, Thank you very much. The comments are coming fast and furious, and I'm really, really humbled by all of your presence here today. Let me give a big shout out to Angel Mendez, Wilson Wang, Manfred Kong, Emin Sim, Hiram, Goy Chochi from New York, Anton Lai, Mark Wong from Hong Kong, Ryan Wong, Singapore, CPK, and Andy Lee, Aries UCAT, Benjamin Seidel, Yen Tan, Ronnie Lee, Ivan Des, and Eltin, and who else is joining us? Seven from Germany and Kelvin from Beihai. We're kind of international in our audience representation. Thank you very, very much for showing up today. Now, I started off today's live stream really kind of heated in the sense that, you're watching these guys, supposedly they are learned, they are wise, and yet you kind of feel they are out of touch with the market because they are not really trading. They're just doing their paperwork, bureaucrats. They're not really thinking hard and trying to advance the data collection methodology and trying to work with the best tech companies out there to perhaps even deploy AI to collect the data, right? They're not doing things cutting edge. That's what I'm trying to say. They are like a bunch of dinosaurs, archaic, and they are so old-fashioned. Many people have already questioned the methodology for data collection for inflation data, right? And this is the part, if they don't work with cutting-edge scientists and the scholars cannot contribute to the discourse, then we're going to have a big problem, right? So it's very, very challenging, right? We are sitting here, real traders in the market, and then kind of being swing left and right by this bunch of jokers. And then what they say, we kind of half believe. That's the worst. We don't trust them anymore. The word or the trust has been broken. So we got to find our way around, right? So thereby, with this backdrop, we still remain firm in our thesis. No change. The only slight change is the tactics. What are the tactics to deploy, how to deploy, and get back on track? So I want to show you right now the most important article for today. And again, before I flash it out in front of you, you guys should do your homework and kind of challenge yourself every night before you come for the live stream and you start thinking about, okay, what's the most important story of the day? And possibly, based on that story, I can fire off one trade. Very important to stay focused this way, right? And then that's where we go really onto the cutting edge of things. And we say, okay, we got an edge right here. And, as I'm talking to you right now, I'm looking at the different price movement. Kind of the market wants to move, right? You can feel it already. Wants to move very, very badly. The market wants to move very, very badly. You can feel it, all right? So this is the part. Now, I covered enough of that. Now I'm going to show you the most important article of the day and kind of set the tone. This is one important sector, and which I'm trying to fit into my thesis of the coin. Yesterday, I spoke about the tossing of coin. Those of you who missed it, please go and watch yesterday's live stream video about the tossing of coin. Super, super important. And here we go. Let's take a look at this article right now that will frame another thinking for us, right? So here we go. By the way, before I do that, I want to show you my supper for tonight. Ready? Ding, 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 ding. This is my supper for tonight. The original chicken in a biscuit, original baked snack cracker. Woohoo! From Nabisco. Wow, this one is like a favorite childhood snack. And I was at cold storage and I walked past and left 2 boxes. Straight away I snapped it up. So I'm not too sure what you're having supper for tonight. I'll be working quite late tonight. Quite a number of things I want to clear off one shot. And again, I had a great meeting today. I met a very, very learned man, a professor from Marshall Business School. one of the top supply chain institutes in the world. And he's here in Singapore, right? And we have a great conversation. We talk about data collection. We talk about data science, crunching on numbers and all that kind of stuff. Really, really, really fascinating. So I endeavor kind of one meeting per day and kind of line it up. Really, really important. Go out there, collect the grassroots data, find out what's going on, and then make some travel plans. And that's quite a lot of things to follow through already. All right. So without further ado, here we go. Globally acclaimed, globally critical chip firm ASML jumped 6% after earnings sees limited impact from US-China curbs. All right. What a great headline. All right. Kind of things that we are thinking about US-China trade war and China-Taiwan tension, reunification, and the one that I spoke about yesterday, holding back Taiwan, is TSMC. That is the crown jewel that TSMC knows that is protecting Taiwan. All right, and the moment the whole world recognizes that TSMC is the crown jewel, then that is where if China comes in, then the whole world will fight China, and kind of complicated. But we should not spend time talking about that anymore. Let's understand what is the implication of this particular article. All right, so here we go. Shares of ASML, one of the world's most important companies in semiconductor supply chain, jumped 6% after reporting strong earnings that bucked the trend of a slowdown in the semiconductor chip industry. All right. Now, the interesting part that we need to understand is this. ASML does not make chips. Instead, it sells the 200 million extreme ultraviolet lithography machines to semiconductor manufacturers like Taiwan TSMC, which are required to make the most advanced chips. And it is the only company in the world making such machines, giving it a de facto monopoly on this part of the supply chain and making it one of the most important companies in the semiconductor industry. So, if they sell more machines, means what? The semiconductor industry is healthy. If it's healthy, means what? The most advanced chips are powering the latest tech devices out there. Consumers are buying. So this implication of the supply chain kind of paint for us a rosy picture. The market is not collapsed yet. There's demand from consumers, from B2B, and that's the reason why this monopoly called ASML is able to sell more machines. Period. That's it. That is the abstract of how we read the article, all right? So we come down right here and we go through this very painful part. We're going to list out some names and we're going to check against them. Shares of chip firms have been battered in 2022 amid a slowdown in growth among companies like Samsung, Micron, NVIDIA, AMD, all kind of been battered, hit right upside down. Right? We're going to one shot take a look at them and then formulate a strategy behind it. This is a classic case of ASML's relative resilience versus the rest of its peers coming to the fore. So, the strength overall that ASML sees, we would say, is more reflection of a relative positioning of the company as opposed to the broader semiconductor cycle. The broader cycle definitely seems to be going through a downward phase right now. Okay? So we've gone through this part, and then we talk about US export curbs on China in focus. They kind of go all out on the chip war with China. And again, this is the part that ASML told US employees last week to stop servicing Chinese customers as a result. Based on our initial assessment, the new restrictions do not amend the rules governing lithography equipment shipped by ASML out of the Netherlands, and we expect the direct impact on ASML's overall 2023 shipment plan to be limited. In fact, ASML machines are critical for firms wanting to make the most advanced chips. If Chinese chip makers can't get their hands on the tool, it will be incredibly difficult for them to catch up to the likes of TSMC. All right. So we've seen this example. We go straight away to ASML right here. Bum. Really, really important. And let's check this out. Here we go. Again, bottom left, 2020. You guys should know the advantage of doing that by now and make it a discipline, all right? So I'm just going to plot it around here, 2020. And straight off, you see when we have a bounce today, this is a spike up, right? This green candle, there's a spike up. Then and only then, we can go about drawing the strong support line at 400. This is what we need to capture, the $400 line, right? So today is kind of a reflection of a turnaround for all firms related to semiconductor chips. And if this is the benchmark set by the monopoly, ASML, how's the rest going to be doing? Just remember, I draw this line, $400 as a support line. And then the article mentioned a few names like Micron MU. Let's do it. Take a look at Micron. Boom. And Micron line is what? The $50 line. Very, very clear. Boom. Right? Straight away, you can draw. So everybody kind of hitting the bottom and then try to bounce up. NVIDIA, NVDA. Check this out. What is the line for NVIDIA? 120. Right? This is the $120 line. How about AMD? It's probably 55. Right? Everybody can't behave the same. Can you see? It's like, come on, it's just the same. QCOM, about 110, that kind of line, right? So about the same, right? So if everybody behaves the same, and ASML as the leader of the pack, because it controls the monopoly of the lithography machines, then we can take the lead from this guy to all in order for us to predict TSMC. This is the biggest of them all. And you look at the, water. And I want to make sure I got the correct one, TSMC. All right, so I should go to TSM. This is the correct chart, all right? We are looking at the worst bounce to be at $60. That's it. It's simple as that, all right? Check this out, $60. Check this out. Check this out, all right? So that kind of set the framework up for what we want to think about the semiconductor chip industry. Straight away in one session with me tonight, you get a glimpse of what it means to understand the semiconductor industry, okay? So with this, what's your take? Of the companies I mentioned just now, which one would you fire off a trade, right? And, is everybody kind of thinking about different things? You may want to support a monopoly. You may want to support the biggest guy, TSMC. You may want to support NVIDIA versus AMD or QCOM. Up to you. This is the fun part about investing. But clearly, this sector we cannot neglect. I'm perfecting my tossing of a coin. And today, with this good news from ASML, I'm rethinking about semiconductor, the chip war, right? How the end game will play out. Clearly, the US government wants to fight China head on to kind of halt China on its progress in the semiconductor industry. They did it on Huawei. Right now, they did it on one whole bunch of lists telling American companies, stop supplying your chips to the Chinese companies. This is a chip war. It's a dirty war when a country that's so known for innovation, technology, and all that, right now they're trying to monopolize it. So that's the politics side of things. We can't dive deeper into that, or else we got much more things to pour our grievances on. But what can we do out of it? this is important. All right. So I already see some telltale signs out there just now, just a short flip of the screens, and I spotted it already. I hope you spotted yours. If not, you can join us at the Don't Stop Believing Trade notification. And this is found right here. You can just go and scan the QR code shown in front of you, or you can go to spi.ke/belief, BELIEF, and you can join us to know what is that trade I will be firing off tonight. All right. And yesterday, I gone through about the Spiking Alpha conference. Thank you so much. So many of you from overseas, you are supporting this event despite the fact that you cannot fly down to Singapore to meet me in person. I'm very, very grateful and very, very thankful for your support. Thank you very, very much. Our tickets are right now running out fast and furious. So for those of you who have not grabbed a piece of the ticket yet, again, you can go to the same QR code, scan it, or you can visit spiking.com/alpha. Spiking.com/alpha, and you get to watch all the details of the event. All right. So let me just remove this. So let's sum it up today. What we covered is a new terminal rate, 4.75%, possibly hitting 5% or more. And again, don't be misled by the Fed. They kind of play us out through this whole mess of the mismanagement of inflation. And right now, they're going to mismanage the interest rate hike. This is disgusting, right? So I think there's a big battle out there on Wall Street. Wall Street is always ahead of the game because we are the real traders, while those guys are just, standing in the ivory towers, making their decisions out of nowhere. So you got to put that into consideration, all right? But if we are ahead of the thinking, we will do well. That's the reason why we always try to balance both views and then find a niche out of it. Secondly, I've gone through the most important article of the day, and that is ASML. Really important to set the tone for the semiconductor chip industry. Very, very important. I kind of... In fact, this goes back to my thesis in 2020 and 2021. I already started talking about semiconductor chips already, right? So we went through the whole roller coaster up, went it down, and right now talking about a rebound from the support line. Wow, we really gone through a lot since 2020, all right? Not wasted. In fact, all this going to make us all the more wiser. So thank you very much for joining me tonight. I hope you enjoy today's session. And please remember, once we kind of switch off, go to YouTube, like, comment, and share. That will really help us to spread the word out about the work that we do. And as more people understand how to catch the spike before it happens, then we got a whole bunch of community of similar-minded students out there conquering and capturing the trades or the spikes before they take place. That is the philosophy of investing. Thank you very much, and may God bless all of us. Good night, everybody.